Let's break down that dreaded word recession. Imagine the economy as a bustling claymation movie. Everyone's busy, things are being made, bought and built. A recession is when that movie slows way down, not just for a moment, but for months. Officially, it's 2 straight quarters of the economy shrinking, GDP going down. That means businesses stop hiring, people lose jobs, and spending drops, creating a tough cycle. Recessions are a normal part of the economic cycle. Expansion, then contraction. Then the big questions as far as, when will the next one hit? How bad will it be and how long will it last? It's like seeing storm clouds but not knowing when the rain will start. When you hear debates about a recession, remember, it's not just numbers. It's about real jobs and family budgets. Understanding this is the first step to making sense of today's headlines. Why are experts so jittery about a recession in 2025? It's a mix of rising tariffs, shrinking immigration, and policy uncertainty. Tariffs, extra taxes on imports, are now at 10%, making everything from cars to electronics pricier. Businesses pass these costs to you, slowing spending and growth. Next, immigration. Fewer new workers means it's harder for businesses to grow and for the economy to expand. The workforce is projected to grow by only 3.3 million instead of nearly 7 million. Fewer workers, fewer consumers, slower growth. Then there's government policy. The Federal Reserve is trying to control inflation without stalling the economy. New spending bills add to the national debt, making future taxes and interest rates uncertain. All this makes businesses and families hesitant to spend or invest. It's like trying to build a clay castle while the price of clay keeps changing. These factors combine to create a climate of caution. The result? Everyone's waiting to see what happens next. That's why recession fears are everywhere. The economy's health report is mixed. Jobs were booming, but now hiring has slowed sharply, just 30,000 new jobs a month, and unemployment is rising. AI investment is a bright spot, with companies pouring money into tech, boosting business spending. But consumers are feeling the pinch. Spending is slowing, and inflation is still above target at 2.7%. People are falling behind on credit cards and car loans. Budgets are stretched thin. The housing market is stuck. Mortgage rates are high. Buyers are hesitant. And new construction is sluggish. Home prices aren't crashing, but growth has stalled. So, we have strong business investment in some areas, but weak consumer confidence and spending. The economy isn't collapsing, but cracks are showing. It's being pulled in 2 directions. Growth in some sectors, strain in others. The foundation feels shaky. That's why everyone's on edge. The next few months will be critical. If you're tired of hearing recession predictions, you're not alone. Forecasting the economy is notoriously unreliable. Models rarely predict turning points. In 2023, experts were sure a recession was coming. It didn't. In early 2025, panic set in after tariffs rose, but the economy kept growing. Why? The economy is driven by billions of unpredictable human decisions. Models can't account for psychology, global surprises, or sudden policy shifts. Even the IMF found recessions are almost never predicted in advance. So, take bold forecasts with a grain of salt. The economy often refuses to follow the script. Uncertainty is the only certainty. So, what's next for the US economy? There are 3 main scenarios. First, the baseline. Slow growth, not a recession, but not a boom, just muddling through. Growth might slow to 1.8% in 2025, then 1.4% in 2026. Unemployment would rise a bit, inflation would linger, and things would feel sluggish. Second, the downside. A real recession. This could happen if tariffs rise further, immigration drops more, or the Fed makes a policy mistake. In that case, a recession could start in late 2026, with unemployment climbing past 5%. Jobs would be lost, spending would fall, and investment would dry up. Third, the upside tariffs drop, immigration rises, and confidence returns. Growth could pick up, surprising the pessimists. Most experts see the baseline as most likely, but risks are real. The path depends on policy choices and unpredictable events. The economy's next chapter isn't written yet. We're all waiting to see which way it turns. So, what does all this mean for you? We're in a period of deep uncertainty. Old rules don't always apply. Watch the big factors: tariffs, immigration, and the Federal Reserve's moves on interest rates. Any change in these could shift the economy's direction fast. Stay alert to policy changes. They're the dials steering our future. The best approach: focus on what you can control, your budget, savings, and avoiding panic moves. The economy has surprised us before. Predictions are often wrong, so don't let headlines drive your decisions. The story isn't over. There's still time for a plot twist. Stay informed, stay steady. Let's sum it up. A recession means the economy shrinks. Fewer jobs, less spending, more anxiety. Right now, we're not in a recession, but the economy is clearly struggling. High tariffs, slowing immigration, and policy uncertainty are making everyone nervous. Predicting the future is nearly impossible. Experts have been wrong again and again. The most likely outcome is slow, frustrating growth, not a crash. A recession is possible but not certain. The best move? Stay informed, watch the key indicators, and focus on your own financial health. The economy's story isn't finished. There could still be surprises. For now, don't panic. Just keep watching.